Hey friends, I feel it's time for me to update you on my portfolio, my profits, and how I navigate such choppy markets and my plans moving forward. My normal ways of updating you my trades are from here and on Twitter. There's only that one position I didn't update you guys because I was, leveraging. I do not encourage leveraging because that's one sure way to lose all your money. If you keep leveraging, you could be having a perfect track record and all you need is just once for the market to wipe you out. So no, leverage is reserved for those who knows what they're doing and they have calculated their holding power and risk levels. If you think of it this way, you can be a total donkey buying shitty companies, but if you have holding power, even the shittiest companies goes up in the long run. I'm not saying all, but you get what I mean. There are 3 times on my channel I've shown you my positions. I'm doing this for you to help you invest better, so I hope you appreciate it. From the last portfolio update on 9th of November 2020, my account grew from 3 million to 4.5 million. So 1.5 million profits in 4 months. When Tesla stock was at its highest, my account was worth $5.5 million. Okay, I want to ask you guys, how many of you think that I regret not selling at highs? Or I want to ask you, do you regret not selling at highs? Those that said yes, doggy, name me anybody that can predict stock price. You can't. So what if I sold Tesla stock and it keeps pushing up towards $1,000 and above? You understand that chasing the stock price is much harder versus buying the stock when the stock price drops. All my positions I'm revealing here, you can trace back to my Twitter posts or YouTube videos. The only position I didn't mention was this. We will come back to that. My average price for Tesla in my do not touch account is $40.10. My call options here is dated 2023, giving me time to get my positions right. I will not hold this position to expiry due to time decay. I will update you on Twitter if I close the position. Nothing much to say about this account. We all know that doing nothing earns the most money. So simple yet so hard. It's a fact that accounts that won't touch over the long periods earns the most money. Okay, let's review what changed. Previously, I had Square, ArcG, Lemonade, McDonald's, and Shake Shack. Now it's AMC, Palantir, and more Tesla stock plus options. For McDonald's and Shake Shack, many of you pointed out on ethics. Why invest in these companies that sell meat? I love the business model, but for ethics reasons, I sold out. Thank you for your suggestions. Actually, all the stocks I sold, if you plot the charts and you plot my timing, I actually sold it all like quite near highs. I just felt something was going to happen and I started to concentrate my position on my highest conviction stock and slowly dollar cost averaging until I had no money left. For Square stock, don't you think this entire digital banking space is like a clusterfuck? No, Square is clearly in the lead, but it seems like the stock moved way too high for my comfort levels, though I think it will go higher. So for ArcG and Lemonade, I continue monitoring. If I go in again, I will let you guys know. Let's go in depth into my Itchy Fingers portfolio. Why AMC? Business sucks, man, but I love the movie theaters. It's a great place to bring your scandals. With COVID disappearing, I'm investing a little because I love the stock. Palantir. Why Palantir? Actually, for most stocks, my mindset for picking a stocks, I ask myself, what will the world looks like if the company succeeds? So if Palantir succeeds, life's going to be great, man. You will have your own Jarvis. Let's talk Tesla. After I sold most other stocks, I had quite a lot of cash and Tesla stock just started to drop. It's pure luck I didn't time the market. Because the beta for Tesla stock is pretty high, I could buy it at a much lower price. So how did I end up with selling 6 put option contracts? On my last options expiry day, which is the 19th March 2020, I released a video on what you could do. Either roll to the 690 strike or 710 strike. Both no wrong. I chose to do the 710 strike. I closed all my put positions and roll it to 710 put strikes and added more positions at the 640 strike. Adding the 640 strike, I was leveraged. Though I only recommend selling puts that you can cover, meaning to say if you have one contract at 640 strike. Because every contract is 100 stocks, you need $640 times 100 equals to $64,000 in your account per contract. Because I know how to repair my way out, I do not recommend anybody to leverage. When I do my videos and educate, I'm in this together with you guys. If you burn, I burn more. I believe that's the bare minimum standard to be transparent. I put myself in your shoes and I know most people just want the truth and transparency. Anyway, I wouldn't want to learn from anybody teaching me who doesn't have full transparency. I mean, that's just me. For my crypto positions, Bitcoin currently sits at 8% of my portfolio because it shot up. I didn't do anything else. 1% is at Defichain. I'll link the Defichain video up here and down below, and that video includes how to buy Defichain. So moving forward, I'll be looking more into the crypto sector because stocks has mostly shot up. The only stock I see now becoming the world's biggest company is Tesla. So I'll just leave it there. Anything exciting, I will update you guys. I hope you learned something. Appreciate the thumbs up for all the causes I believe in. And as always, invest safe.